Thanks for wanting to find out more about the top 10 stock service for 2018 and maybe a little bit about what's included in the list that goes along with it. Our research director, Sheraz Mian, also is here with me, and he also manages this portfolio.
That's right.
Right? So you actually pick the stocks that go on the list.
That's right.
Let's start out, though, for people maybe who are newcomers to the service, a little bit about the basics, about this process, about creating this portfolio.
Sure. It's a good question. It's a blend of top-down and bottom-up process. The top-down part of it is my outlook for what the market is expected to do, the different sectors of the market that I feel will do better than others. And then the bottom-up part is an execution of that outlook, basically. So we have the Zacks rank has been and continues to be an amazing stock picking framework for us. And then I use a variety of metrics and a due diligence process to make sure that this stock and these stocks not only have rank 1, 2, or 3, but have very good balance sheets, have very good earnings growth prospects beyond next year, which is what the Zacks rank captures, and then the effectiveness of management. I'm aware of the large cap, small cap mix, and that again goes back to the top down portion of it. It's all of that mix. Since it's only 10 stocks, you can't really have the level of diversification in a much bigger portfolio. But I try to have some diversification, even though it's a much smaller and contained portfolio.
So let's talk about that market outlook that you alluded to a moment ago for 2018. All things remaining constant as we open up a new year. We begin the 9th year of a stock market rally.
That's right.
So you see more of the same here for 2018?
I think 2017 was unusually good. 2018 will not be bad, and a lot of the positives that we saw in 17 will continue in 2018 as well. But the magnitude of the gains that we saw in 17, in my judgment, will not be replicated. I'm not suggesting that the market will go down. I think we will have positive returns for the major indexes by the end of 2018. And there will be a lot of variety in the different sectors and different parts of the economy and how they do. But in my judgment, the broader indexes, like say the S&P 500, mid to high single-digit returns seems more reasonable to me, given where we have come from. So you mentioned the 9th year, you mentioned the gains that we had in 17, and I think that's my overall outlook.
Want to go on the limb for S&P 500 3000 sometime in 2018?
It's possible. It's right in that range that I foresee. I think the overall theme should remain favorable and positive. It's just that how long we have come from those 2009 lows, and then the sum total of the positives too that were already priced ahead of those positives actually taking place. And then let's not forget that 2018 is a midterm election year too, and we have this partisan divide, and that usually provides a little bit of a toxic backdrop for the market.
What about earnings? They're going to remain a strong underpinning for the market?
I think they really accelerate. We had positive earnings growth in 17, which followed about 2 years of flat earnings picture. 18 is really strong, and what we saw on the fiscal stimulus side through tax cuts and all of that gives it a further boost, but none of that is news. This is all something that the market was expecting and priced it in ahead of time. So the marginal improvement relative to expectations will push those individual companies and those individual industries and sectors relatively higher, but on the whole, the positives are priced in.
Let's talk about what may be the news, downside risk for the market.
Yes, so I think the base case scenario has to be positive, as I mentioned earlier, positive gains for the year, but there are risks. The Fed has sold this very calming a policy outlook to the market, and the markets have totally bought into it. We had 3 rate hikes in 17. The Fed is projecting another 3 rate hikes in 18, and that's probably what will happen, but there is the possibility that all this fiscal stimulus that I was talking about earlier, and given how long it's been since we got out of the last recession, and given where we are in terms of consumer confidence, in terms of the labor market, in terms of the manufacturing sector, that this sum total of positives starts showing up in inflation. And just a whiff of inflation will prompt the Fed to do more than what it had telegraphed in terms of the 3 rate hikes, and that's a risk for the market. Valuation is another issue that keeps coming up. I don't think valuation is as bad as we had seen back in the late 1990s, but stocks aren't cheap. The one redeeming feature for stock has been that there aren't really that many alternatives to stocks, particularly when you see the positive outlook for the U.S. economy, for the global economy. That argues for stocks being the place to be. And so the risks are not my base case, but we should be mindful of those.
Let's get a little bit more portfolio specific.
Sure.
Can you share any key themes, key sectors, key stocks that you might be including?
Yeah. So I'm not expecting super strong gains from the broader indexes, but I am expecting super strong gains from the top 10 for 2018 portfolio. And the way I'm doing that is it's a concentrated play on 2 broad themes. One, consumer-centric, the second on the cloud computing side. Just a brief comment on the consumer side. I think that the macro forces that have been in play over the last few years starts showing up in strong wage growth and strong disposable income, and that helps the consumer side of the economy, whether it's discretionary, whether it's retail, whether it's even staples, and that's what we have in the top 10 portfolio. So we have 3 stocks that play on that. And Planet Fitness is there, Live Nation is there, VFC Corp is there. And one additional factor on this consumer side of the equation is that we were looking for exposure to this so-called experiential spending. That the new demographic, apparently, we are old-timers, Terry. We are not.
Well, don't need to remind me.
Yeah, we are more in the tangible goods spending generation.
Right.
But this new generation likes these experiential goods and services. So we have exposure to that. On the tech side, cloud has been a recurring theme over the last few years. I think that continues in 2018 as well. We have cloud on the data analytics side. We have cloud on the security side, and that's showing up in the picks as well.
Okay. Well, thanks for sharing all of that information. I'm sure we'll check back with you a few more times during the year here. In the meantime, with Sheraz, I'm Terry Ruffalo.